The only source of knowledge is experience. Albert Einstein. Think that through, my friends. What is Albert Einstein telling us? He's saying that experience gives us knowledge, whether it's someone else's experience, like we read in a book or we take a training, a video, whatever it might be, and or our own. I would say it is a combination for us in charting of the experience from learning how to chart, having someone show you the ins and outs, such as the weekly vertical crossovers, the 2-day recrosses, what the price percent oscillator, derivative oscillator is, how Heikin-Ashi candlesticks work, what Bollinger Bands are all about. Those kinds of things, the derivative oscillator being a leading indicator, a triple smooth version of the relative strength index. The price percent oscillator being a percentage oscillator based on the MACD, but a percentage, not an unbounded one. And in addition to that, all of these things being used together in multiple time frames. Now you can learn that from the prior experience that I have that I teach, okay? Then what do you have to do to gain more knowledge? You have to then apply it on a daily basis, 10 to 15 minutes. That's all we ask. If you will commit yourself to that, don't worry about how long it takes, okay? Once you master it, once you master charting, whether it takes you a year or 10 years, once you become a charting master, you can make up for all the time you did not trade in the money you didn't earn in trading, learning to be good. Imagine if you could be able to track charts and consistently, not 100% of the time, but let's say 85, 90% of the time, you could make successful trades. What would that mean to you? It would mean an incredible ability, an incredible just offering of the market's riches to you. You're striving to learn to be a charting master. Don't worry about how long it takes. Simply spend the 10 to 15 minutes a day filling out your daily market worksheet, your trade worksheet when you're doing a practice trade, the once a week, weekly review and forecast. You listen to that, you fill out the weekly worksheet. Again, all these things are available for free. Go to chartingwealth.com, sign up for free. You'll get the daily podcast. You'll get all of those documents and PDFs right there for you, trainings on how to use them. We do all this for you, and you wouldn't believe the number of people that don't take us up on it. But you're not one of those. Stick with us. Let's jump into these charts. Stocks are up, bonds down, gold and Bitcoin up. Let's see where things are a-going. We start the week off. We see that price percent oscillator getting very, very close to the red signal line. Hasn't crossed over yet. And of course, it wouldn't matter if it did. Why? Because you don't call a candle till it closes or right at closing like we do when we have weekly vertical crossovers. Derivative oscillator barely negative. Price percent oscillator barely negative. Have a green up candle forming for the week, up 0.17%. So not up much. Go to the 2-day. We can see we had that 2-day crossover going up back on the 19th, and it has just continued to proceed up, up, up. This is the first day of the latest 2-day candle. It's an up candle, price percent oscillator heading up, derivative oscillator a little bit more than flat. Look at this half day. You can see where things have just continued to move up, but check out the price percent oscillator. Just won't cross over. Now, this is the half day. We're not putting a whole lot into that, but it won't cross over. Part of it is because things go up and then slide sideways and down, up and then burn off, up and then burn off. But we'll continue to watch, see where things go. So that's where we are on the S&P. We could have a weekly vertical crossover by the end of the week. May or may not happen. What about the Nasdaq 100 up 0.34%? It's getting closer also, very similar to the S&P. Green up candle forming up for the day, 0.34%. I may have just said that. Derivative oscillator losing downward momentum. We look at the 2-day chart and look at those candles just running up, stacked up. Price percent oscillator, derivative oscillator going up, green up candles continuing to form half day. And again, moving right up that half-day trend line. Up in the morning, up a little more. in the afternoon. That's where we are on stocks, both of them heading to potential weekly vertical crossovers, maybe by the end of the week. What happens if those die? Then we would look for the 2-day to cross over going down at some point, and we would do a 2-day recross and short PSQ, which is the short fund, and I'll put our inverse funds just for the heck of it at the inverse trading, how to make money in your practice trades when markets crash, something like that. But I'll put both PSQ is the inverse for the Nasdaq 100 and SH is the inverse for the S&P 500. Now let's move on to bonds. Bonds down a little bit for the day. 0.85%, our biggest was our only downer for the day, and just under 1%. We see a green spinning top. Is that what I'm seeing there? No, I don't see a wick on the bottom. Or no, it's very hard to see. I don't. So looks like a green up candle's trying to form. Price percent oscillator still negative, about flat. Derivative oscillator negative, losing downward momentum. What do we see on the first day of this 2-day candle? We see where we had 2 prior nice big up candles and then just sort of dying on the vine, turning into a red, pretty much a doji. Price percent oscillator also losing a lot of its upward push, just dropping off. And the derivative oscillator still oscillating up. That's just hold over. Look at the half day. You can see where things were sliding sideways for a few days here. And then, of course, hammered down in the morning, recovered a little bit in the afternoon, staying right above that 2-day trend line. So waiting for bonds to sort themselves out. You can see that the 2-day is on an up move still. The weekly is still negative. Now, could we have a 2-day crossover going down? A 2-day, what we call a recross? That is possible. Hadn't happened yet. We'll just wait, watch, and see. You could also just have bonds take off and there be a weekly vertical crossover. We don't know. We'll wait. We'll see. We'll let the charts tell us because we can't tell the charts. You will not want to die on that hill thinking you can make the market do what you want, but you wouldn't believe how many people hope against hope that the market's going to do what they need it to do. That's like betting on snake eyes or whatever those things that craps players say. So let's go to gold, up for the day 0.52%. We can see the price percent oscillator pulling away from the red signal line. Derivative oscillator gaining upward momentum. Red open box candle forming. That's a slowdown in the up movement. We can see things sitting right there on that weekly trend line. And again, up 0.52%. We did have the weekly vertical crossover at the end of the week. We will see if gold's going to take off. What do we see on the 2-day? Well, it was discouraging for that weekly vertical crossover. Why? The 2-day had popped quite nicely back on the Friday, Monday. That was Monday the 25th of this prior week. And then after that, just sort of died a little bit and slid sideways. Well, the latest we see a red spinning top that's forming. A little glimmer of hope is the price percent oscillator is trying to head up. Derivative oscillator is positive but losing upward momentum. Half day, we can see again where that big drop occurred in the morning on Friday. Lost a little bit of that in the afternoon and then headed up on Monday in the morning, about the same in the afternoon. So we'll keep an eye on gold, see what that weekly vertical crossover does for us. We're keeping in mind that last one died on the hill for us. I mean, literally just that next week rolled over, went red, and then down for, 4 weeks after the crossover. So not a good one. We'll see what this one is like. That's where we are on gold. Lastly, let's go to Bitcoin. What's Bitcoin up to? Bitcoin is up 1.16%. Boom, go Bitcoin. However, when we look at the weekly, what do we see? Well, we see things struggling to stay above that nice weekly trend line connecting 3 solid candles. We saw weakening last week, didn't hit the prior high, the week ending the 22nd. This last week ending the 29th, these are both October, did not manage to push up as high. Candle body itself was a little bit higher, but smaller. Again, we like to see candle bodies either stay the same or get bigger, and then heights go higher. whether it's on the candle body and particularly that wick pushing up. This we see the week starting off with even a weaker candle. It is green, but it is small. It is not reaching anywhere near the heights of last week. Consequently, that price percent oscillator is continuing to, again, sort of flatten out. It's still heading up a little bit. Derivative oscillator is still oscillating because of all this prior movement up higher. We look at the 2-day. What do we see there? We saw where things peaked back on the Wednesday, Thursday, 2-day candle, the 20th and 21st of October, and then sort of losing things. This latest one is a green open box candle, so it's good to see some of that. Price percent oscillator still heading down, derivative oscillator still devolving. So we'd like to see that turn around. What do we see on the half day? We see, again, where things peaked back on Wednesday the 20th, and then just sort of devolved since then, slowly going down, sliding sideways up a little bit, down, and then up, and maybe it's trying to regain a little bit of momentum. Would love to see that half-day crossover going up. Would love to see that 2-day get stronger. And again, keep your eye on the prize. One thing Bitcoin will do is it will show lots and lots of volatility. That's what makes it exciting. If you care about Bitcoin, want to learn about trading cryptocurrencies, then come practice with us. We've got some charts that work quite nicely. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.